Hey guys, welcome to my second video. What I'd like to discuss in this video here is qualifying the borrower. Home trying to get some lunch. My wife Cassandra cooked and Ethan is crying, about to take his bath for the day. But going back to the topic, qualifying the borrower. Most persons nowadays, when looking at purchasing a home or property, they would look at getting financing. This would be from either a commercial bank or a credit union or some other financial institution. And a lot of persons don't know what is required when you're looking at getting a piece of property or construction loan for building. We call them bridging loans, or just a straight out property buy. To buy something with a home already established or apartment complex or whatever it may be. So I'd like to talk about qualifying the borrower. First of all, before you can be qualified, you would have to be working. I'm not necessarily speaking on persons who may be self-employed. I'm talking about employed individuals looking to purchase a home. Usually the banks would look at longevity on the job, how long you've been on the job. It gives us some aspect of how loyal you may be, how stable you may be. So usually the longer the person is on the job, it's a good indication that they have good stability. Also, you have to be able to afford the payment. Affordability is always a big factor in whether or not someone can afford a mortgage. So if you can afford to meet the payments, that's something else that we also look for. But in terms of what we need from the customers, definitely we need an employment letter. Your IDs would have to be up to date. Usually passport and some other government ID. Also address verification. Now this would be something to say where you live. It can be a utility bill, BEC, BTC in case of the Bahamas, or whatever other utilities there may be. We also would accept other bank statements. And then if there's a prominent person, a manager level person in the bank who may be familiar with you and know where you live, they could probably sign off to say that I'm familiar with this person's address. So you would need address verification. If you're a person who gets pay slips, the bank would also want your most recent pay slips, just to see if you're paid on a consistent basis and what the amounts would be, to get a good average of what it is that you earn to properly qualify you as the borrower. So once you bring those items in, the bank would look at the property that you're purchasing. Now, whether it's a completed structure, whether it's just a land, whether it's something you want to build, the bank is going to look for appraisals. And what the appraisal is an appraiser who is qualified to state what the value of something is in terms of real estate. They would state their reasons and all of the factors that would determine what the finished product, what the value of your property would be when completed or as is, or depending on the type of purchase. You would need an appraisal. If you would also need a sales agreement for those persons buying property. The sales agreement, and the bank would like for you to have also your legal fees in place. Now in the US there are a lot of bureaus. The process is different. You don't necessarily need a lawyer when purchasing a property, but in the Bahamas the banks will not consider the property unless a lawyer is involved. Basically because we've had a lot of issues, with fraud and a lot of persons reselling properties over, and property must have clear title. In order for a property to have clear title, you must be able to show title or transferring of title going back to at least 30 years. And the government, the banks consider then that that person has a good and clear marketable title over that said property. So it's always good to get a lawyer involved. Make sure you get a lawyer that is well known, one that is trusted, one that you can trust, and that do excellent work. So legal fees can run anywhere between 2 to 4%, maybe even higher, and depending on the amount of the purchase. So if you are looking at, say, a property for $100,000, then your legal fees could run anywhere between $2,000 to $5,000 and maybe more. Stamp duty, we discussed in the first video. Stamp duty is not part of the legal fees, even though a lot of persons may calculate it as such. Stamp duty is actually paid to the Bahamas government. It's taxed. that the government earns on your purchase. Now, for persons making a first-time purchase on a property, you may be able to qualify for stamp duty exemption. The government has made that available for first-time property purchasers, so you may get away with that expensive amount. Stamp duty can range from anywhere from 6 to 10%. I may be a bit off on that, maybe 4 to 10%, but the range about 6 to 10%. So it can be quite expensive. I'm pretty sure that anything 100,000 and over, you're looking at 10%, so minimum $10,000 tax. So if you can get exemption, if you're a first-time property purchaser, make sure you speak with your lawyer to try to get all of that in place. Also, if you're not a Bahamian citizen and you live in the Bahamas and you want to purchase property, you can. You would just be subject to annual taxes. On the family islands, persons getting properties on the family of islands, you do not have to pay property taxes, annual property taxes. You are exempted. But I know persons in Nassau, not sure, I think maybe Freeport as well. You guys do pay property taxes. Someone can confirm that for Freeport, but I'm certain for Nassau, persons pay property taxes. So those are the things that you would need, guys, in terms of purchasing a property for the first time, or purchasing a property, or on the whole. That's what the bank would be looking for. You would have to have your IDs up to date. You would have to have address verification. You would have to be on the job for a good amount of time, minimum 2 years. You would have to be able to afford the mortgage. You would need an appraisal stating the value of the property. You would need a sales agreement for those persons buying. You would need your down payment amount. Down payment amount for most banks, most commercial banks, is 20%. If it's a first-time buyer, then the bank look at 10 to 20% for those persons who are purchasing for the first time. But for everyone else, it's 20%. Down payment can be in the form of cash. If you have cash, you can use that. If you have other properties, you can use the equity on those properties as down payment. Or if you know someone who has either cash or property who I guess you can trust and who would be willing to be a guarantor for you, then they can offer their property to give you some down payment, and reimbursement would come over the years, I guess, after you would have paid down on the mortgage so much. So if you guys have any questions with mortgages, other than that, what the bank would require, you can go ahead and comment, like this page. You can share it also. And until next time, guys, good talking to you.